So let me ask you, the average person's watching this right now saying, okay, Robert, I'm not like you. I don't run a company. I don't have a brand. I haven't sold 41 million copies. I don't have oil. I don't have rental properties. What can I do? I'm in a time like this. You're telling me the market's going to go in shambles here pretty soon because of currency, and we printed $500 billion of money in September just in 1 month, not including the $3 trillion we printed in the last 7 years prior to that. What do I do to be prepared for a time like this?
Well, first of all, everybody can do something, but they won't. And that's the problem. You know, the reason, who stole my pension, there was plenty of money in it, but nobody did anything. They just stole it. And people did nothing. It's like I said, when the crash came in 2008, not one of those guys went to jail. They got paid bonuses. So there's something rotten inside America. And I think the problem with many Americans is they're complacent. They expect, well, it'll heal itself again. So the thing that everybody can do is, as I covered in Fake, my first investment was a gold coin in Hong Kong. I bought a Krugerrand. I was flying off an aircraft carrier in Vietnam, and I went to Hong Kong and I bought a gold Krugerrand. The date was 1972. The reason the date's important is because in 1972 it was illegal for Americans to own gold. So I had to smuggle that little puppy into America. I put it in my pocket, came off the ship, and nobody checked, But I felt like a criminal as I smuggled this gold coin because it was illegal for Americans to own gold after 1933 under Roosevelt. But that gold coin today is worth almost $2,000.
The one gold coin?
Yeah, and I still have it.
What'd you pay for it?
$50.
$50 to $2,000. 1972?
Yeah, it just sat there. So I have and so I never, because I understand money, that quantitative counterfeiting and zero interest rates, I don't trust the dollar. So for most of my life, I've saved gold and silver, and not ETFs. I stay completely out of, I know that's your world, but my world is completely into the hard assets. So I have millions in gold coins and silver coins. I just kept saving it because I don't trust the dollar. So everybody can buy a silver coin today for $20. A silver eagle is $20. But how many people will go to a coin shop and buy it? Probably none. Less than 0.1% of Americans own precious metals. And silver today is 50% below its all-time high. So silver is the biggest bargain sitting in the market as we speak today. It's about $20. It should go to 50. So at $20, and I tell my friends, I go, yeah, think about it. That's the problem. So everybody can afford $20. Kids can afford $20. The thing is, people won't do it, and you know that too. When you deal with people, most people are pretty sedentary. They want to do the same old thing. Well,
Sure.
I'm happy. Nothing's going to happen. Oh, he's just trying to scare me. But I was talking to my doctor last night. He says, "You've been saying this stuff for 25 years. I never listened to you." I said, yeah, well, he says, well, now what do I do? Because his 401k, as we cover in this book here, the average firefighter has about 1.2 million in pension, but there's nothing there.
What do you mean?
Their payout's going to be at 1.2 million. The average
firefighter retiree has a $1.2 million pension payout.
Yeah, that's how much they'll get paid out.
Okay.
But there's nothing there as a problem.
Meaning what? Meaning they don't have the money to pay the benefits?
It was stolen. It was stolen by Wall Street.
So how is that
That's
going
why
to be fulfilled?
we wrote this book.
How is that going to be fulfilled? Because I know one of the stats
Taxpayer.
you said by 2050, 2 billion retirees will be above the age of 60. What was the stat you said about?
Okay, today is 2020, right? In 10 years, 2030, 2 billion baby boomers across the world will retire. Japan's broke. Argentina's broke. China's broke. Italy's broke. Germany's broke. All these old guys are retiring. And the stock market, I live in a fairly exclusive place in South Carolina, and I was talking to my friends there, and they said, oh, we love Trump, we love Trump. Stock market's an all-time high. And I said, yeah, but so is our debt all-time high. See, they watch the stock market, they don't watch the debt. And the repo market, the repurchase market, is one of the biggest markets in the world. And the Fed is bailing that one out now. So the average American is watching the stock market, but not what's really going on. So that's why I wrote, Who Stole My Pension? So that means retirees, their kids, taxpayers will pay for the heist.
So let me ask you this. So one is, you said buy coins, whether it's
But
silver
you
or
don't
it's
buy
gold.
gold coins. You don't buy gold coins to make money. You buy
Long-term.
gold coins because the dollar is going to go down. So I don't trust the dollar.
Anytime Buffett says, I remember when Buffett says, he bought $35 million of silver. I don't know if you remember that
Yeah.
when he bought it. You're like, okay, be prepared because something's about to happen.
Yep.
Right? If he buys gold, just be ready in the next 6, 12, 24 months. He's anticipating some kind of a crash to be taking place. He's right now in cash because
That's
he's
smart.
Yeah, he's anticipating something to happen
Yeah.
to buy up businesses and rebuild them. He does that all the time.
And then he's going to go in after the crash.
He's going to go after the crash.
Now, the tragedy is, which I cover in Fake and Who Stole My Pension. So you have this defined benefit, which are police officers, firefighters, and school teachers and union guys. Like the UPS drivers, they're pretty smart guys, those UPS drivers. They were getting a $5,000 a month pension. They gave my haircut down to $850 a month.
From 5,000.
Screwed them all.
Now, this is every one of them, Robert, when you're saying this? From 5,000 to 850.
Yep.
How can they do that?
Well, look at my friends who are airline pilots. Lost everything. They stole the pensions. Nobody talks about it. U.S. Air, they stole the pensions. The Teamsters, they got stolen by Wall Street. And nobody knows about it.
Are they not insured?
Well,
Are these pensions not insured?
PBGC, right? Pension Benefit Guarantee. They're broke. The defined benefit, which is the DB pension plan, teachers, firefighters, school teachers. I don't have one. You probably don't have one.
No.
That was the industrial age pension plan, my father's pension plan. The PBGC was to back it up. Today, as we talk, if they had to bail out the defined benefit pension, it's anywhere from $9 trillion to $17 trillion shortfall. Look at CalPERS, California State Pension, $1 trillion underwater. CalPERS alone. And then now you got the 401k guy. The average 401k guy, at least a school teacher has $1.2 million. The average 401k guy has 65,000.
By retirement. The average 401k guy has 65,000
Yeah.
by retirement.
And so when what the actuarials do, you know those guys, right? The guys that put the numbers together, they lump in the guy with 1% in with the guy that got nothing. And it comes out every American's a millionaire because the upper 1%, they're so
Of
bloody
course,
rich.
of course.
They lift everybody else up.
If they take the top 5% out, those
Oh.
numbers will be a whole different story.
Yeah,
Yeah, you can. You add those billionaires in there, it shows the numbers to be much better.
yeah. It looks really good when you average it, But when you look at the case by case, so the average 401k guy is 65,000 to 100k when they retire. That's just America. So remember, Paris is rioting right now because they're trying to cut their pensions. Japan's rioting, Hong Kong rioting, Argentina, Indonesia. The old guys like me are going to suck the system dry. So if anything's going to bring down the market, it's going to be pensions. Because I can't I wish I could get younger, but I can't. So these guys are getting older and older. Every day that goes by, we get closer to the edge. And they're like lemmings, So that's why my medical doctor
Yeah.
says, I should have listened to you 10
Yeah.
years ago. So, well, you still got time.
Okay, so one is some kind of a precious metal is one. Two,
For money.
for money as a form of
Yeah.
investment, long term.
No, it's not even an investment. It's an insurance policy because the dollar is going to go down.
So you buy it and you resell it, or you buy it or you keep
Just
it?
keep it.
Okay, so long term, you buy it and you keep it and you
Yeah.
set it
I
aside.
never sell.
Okay, so you buy it and you keep it. Okay, so that's one. So what else can I do today? If I know these bad times are coming, I'm a regular guy, what else do I do to position myself better?
Well, what a person does is what they can do. And since the average person has no financial education, they can't do much. So like I can short the market. I'll make more money as the short's coming down. So I'm looking forward to it. But the average pensioner, they're handcuffed. They can't get out. If they take the money out, they're penalized 30%. They screwed them. They screwed everybody. That's Wall Street, the government, and all these guys.
So what can I do? I'm one of them. What do I do? Does it go back to employee, self-employed, business owner, investor? Like, go find a business, go start a business, go reposition yourself career-wise. Is there a 1, 2, 3-step process on what I can do to be prepared for it?
Well, the next book I'm writing with a guy named Jim Rickards. He wrote Currency Wars and all that. The next book I'm writing is called The Ravens. And Jim and I see eye to eye, definition of intelligence. He says, you should have gold and you should have silver. You should have museum quality artwork. I don't have any of that.
Museum quality artwork.
Yeah. And real estate. Income producing real estate. Like I have a friend in Panama. He has an avocado farm. He says, he's a Canadian. He says, I got out of Canada because Canada's in worse shape than America. Now, this guy's he's a bond trader. So he's sitting in Panama growing avocados. He says, because people have to eat. Another friend of mine is growing blueberries. But another friend of mine, he moved up to, he was from Seattle, excuse me. He had a big house. His kids all moved out. So he converted the kids' bedrooms into 1-bedroom apartments. So he put a kitchen and he put a toilet inside his little bedrooms. And so he now rents out 4 bedrooms. He's making more money today than ever before because a lot of workers commute to Seattle. So they come in, they come in on Sunday night, they check out Friday afternoon. It's at a little house. He's making more money. So the point is, everybody can do something, but you got to figure out what you can do.
Yeah, so to me, what I take away from what you just said right there is use your creativity to kind of position yourself in a way, whatever that could be. Just think outside the box and be creative.
Don't short stocks if you've never shorted a stock, because you know how dangerous that is.
100%, because it could flip on you and then you're...
you short and then it goes up.
Yeah, you're
out.
You're out, especially...
Out of the money.
I remember back in 01 when the 99, when the margin calls were coming up. I think there was even a movie named Margin Call 15 years ago. But how about industry-wise? So right now when you're looking as a lens, so don't look at yourself as who you are today. Let's go back to you're out of the Marines, okay? You're, 32 years old, okay? You're 30 to 35 years old. You've just started a family, okay? You're just getting married. You're just about to have a kid. You don't have a lot of money to yourself. Maybe you got 20, 30, 40, 50 grand. You got something going on. But this is coming. And you're watching and saying, okay, this makes sense to me. I buy into it. This time is coming. How do I pivot now with industries that I can look at that could be good ways to position myself for 5, 10, 15 years from now? Again, if this is Robert 30 to 35, how would you position yourself at that time? You don't have a lot of money.
Well, you and I are educators, really. And there's something you should know about technology. Look at all these cameras. Okay, it's called the Lindy effect. This Nassim Taleb wrote about it. He says anything that's been new in the last 20 years will be gone in 20 years. What's going to survive is old. So everybody thinks, well, technology is going to make it. What survives is old. It's the reason gold and silver will survive because it's old. Bitcoin may not survive because it's new. So I'm not telling you what to buy, I'm just telling you how to think. So Nassim Taleb has a book called Anti-Fragile, which is good.
Excellent read.
It's fantastic. He's a smart guy.
Oh, yeah.
But he writes about how we have in school today, we're raising snowflakes. You have to have safe rooms. You can't trigger, you can't say anything. So we're raising a bunch of snowflakes. And he says the guy that's going to survive is somebody who's not fragile, anti-fragile. So what he says is this: whatever doesn't kill you will make you stronger. So he says when you go to the gym and you pump weights, you push 100 pounds, that means the next time you push, you might go 105. So bad times will make the strong stronger. And bad times will make the snowflakes weaker. So the thing is, as my Mexican friends would say, get some cojones, get some balls out there and get ready for whatever is coming. Don't run and hide and say, oh, Trump should have saved me or Bernie's going to save me. So the big thing is this anti-fragile is good, but another thing they should know is the bigger something gets, i.e. our banks, the more fragile.
So the too big to fail companies are
More fragile.
for fragile,
More fragile.
more fragile.
And the companies that will survive are like our companies because we're small.
Nimble,
Yeah.
make quick adjustments, quick moves.
The bigger they are, the harder they fall, right? When I nauseam talent, Anti-Fragile, Black Swan,
Skin in the game.
yeah, Skin in the Game, great book, great thinker, you know. So you're working for a big company like Google, you might be safe today, but you might be gone tomorrow. Whereas you're a little startup, you might have a better chance. I'm not saying what it is, but there's something everybody can do. Like I said, everybody can buy a $20 silver piece. Everybody can afford 20 bucks. But will they do it? No. They'll be at Starbucks sucking it down instead.
So what would the 30 to 35-year-old Robert Kiyosaki do right now? What industry would you be looking at today to make your money?
I'd be in this business.
You would still be in this business. Education,
Look at this.
content.
Look at what we're doing.
Wow.
Look at what we're doing. You know, I mean, I have several YouTube channels going out. I don't know what I'm doing, but I have young people doing it for me. So I'd be with technology. Now the cameras will be obsolete, but you can buy a new camera. Do you know what I mean? I wouldn't invest in the camera. I'd buy a camera, but I wouldn't invest in the company. You know what I mean? It's how you think about this right now. So just know that those who are in big companies who think they're safe might be at the most at risk. You know, if you're working for Bank of America or Wells Fargo, you might be at risk.
So you would position yourself more with startups than the bigger companies.
Small company.
Incredible advice, by the way.
No,
Incredible
I don't like to give it. This is how I think.
It's great counsel, though, but it's great perspective.
Yeah.